A concept you probably heard a lot about in the realm of investing is dollar cost averaging. I'm going to dive into kind of how I like to dollar cost average in the stocks that I own, maybe some concepts, some strategies around that. I'm not going to, of course, there's a million different ways people like to DCA and they like to put in just a little bit and then DCA in over time. I don't necessarily like to do that. Honestly, let's just jump right into it. One disclaimer, real quick. I'm talking about primarily investing in single stocks and maybe not DCAing into an ETF and a retirement account through your work weekly, something like that. Totally awesome, completely fine. That's not bad. That's not really what I'm going to cover in this video. I'm more talking about investing in single stocks, companies that have an earnings and shoot up or down, because that's when it's most obvious to me. So let's dive into that a little bit. So with something like NICE, this is a stock I own. I've bought into fairly recently. It's not a particularly large company. I haven't known about it forever. I just haven't had it on my radar per se. And also I like stocks generally not super high PE. There's definitely some exceptions I bought into, but they're one where 5 years ago their PE was closer to 80 up here, and now we're sitting at 20, and actually it's even a bit lower than that. Forward PE is like 11.5. So when you're looking at a company, or this is what I do, I don't put in my max allocation possible. I don't be like, okay, I'm going to put in, whatever amount. Maybe for you it's let's do an even number, $5,000, right? You don't really want to put ever more than 5,000 into a company. I mean, if it goes up a little bit, that's fine too. That's not necessarily what I do. Let's say where you're at financially, 5,000 in a single stock is just where you're at. That's the max you would ever want to put in. For example, this is what I would do. I put something like 2,500 into a stock when I first invest in it. Maybe a little bit less if I think it's high, but I still want some exposure. And then over time, if it goes up, let's say it does really well, and then all the way it's up to 5,000. Okay, that's awesome. Now I have a lot of exposure. Maybe I didn't buy into it. I'm playing with quote unquote house money where I put in 2,500. Now it's up at 5,000. That's awesome. And maybe it kept running up to, let's say, 10,000. It would start to feel more uncomfortable, but not crazy. It's not like you put in 10,000 yourself. For this example, just so I'm clear, I'm not saying this is exactly what I do, but it's a good representation of the percentages of the money I put in. So like I said, let's say I feel comfortable with putting 5,000 in total. That's the max I would feel comfortable with putting into a stock of my own money. If it went higher because it appreciated, that's a different story. So I like to put in, let's say, somewhere between, usually I aim for 2,500. So let's say that I invested in NICE within the last year and a half or so. I don't even remember the exact, but I'm slightly down on it. It's not that the company itself has done terrible. I mean, we can see back here, 2021, they're at 300, but their PE was like 80. Actually, I think they have like 2.5x earnings per share in this time frame, which is funny because they're worth half as much, technically. So this is a company that's just kind of the stock market's been out on, which is fine. That happens. They had a met earnings. I mean, they're still growing like an average company would. It's just people are expecting them to do more. So they fell like 15% on the earnings. We can see that recently. It looks terrible for them. Let's get off the candles for a second, the line. Yeah, we were up 178. It just fell right after. So this is a company I'm looking to buy into. I'm looking to DCA into. I didn't put in the max I feel comfortable with ever having in it. Putting 5,000 in, right, and then having to watch it go down. I put in a decent amount where I'd still be happy if it doubled. Now it's up to 5,000. Obviously it didn't. Now this is a good opportunity for me to dollar cost average into. Now some things I'm not looking at. Like I said, if a company is doing bad, like objectively bad, like let's say NICE was like, okay, we're aiming for 15% growth this year. And then they're like, yeah, we're not going to grow at all this year. That's a different story than, okay, we're going to grow 15%. Actually, we're going to grow 10. Because 10, believe it or not, the S&P 500 grows on average 10 to 12% every year. That's what it's historically done. So a company growing 10% is still almost an average company growth. Like I said, we're looking at a company here that's actually below the S&P 500 value. It's at 11.5 for PE, the S&P 500, somewhere in that 22 to 25 range. So as long as a company isn't just doing terrible. I'm not saying keep buying into a company that's just getting absolutely wrecked, that's doing terrible, they're in a bad, whatever it may be. But if the premise of buying into the company doesn't change, I like Nice because I think they're relatively cheap. Okay, that still holds up. I think they're going to continue to grow. Okay, they're growing maybe a little bit slower than we expected, but they're still doing okay. They're not doing terrible, and I like the industry they're in. It really is that simple, guys. This is what I do. You guys can do what you want, but if it were me, I don't put in the exact highest amount I would ever feel comfortable having in this or putting my own money into it in case it continues to go down, because then you're going to be trapped in a very difficult spot. You're going to be like, okay, do I have to watch this just continue to free fall and do nothing? Sometimes you get anxious, you can feel like selling, and it might force you in a position where you feel like you have to sell, or you feel like you have to put more money into it than you feel comfortable. And there's a line for everyone. I'm not telling you what that is, but find out what that is and then work around it. Give yourself some leeway, and don't beat yourself up if you could have put in more and you're debating putting more, but you wanted to give yourself a little bit of room. You can't predict the future. I can't predict the future. If anyone could predict the future when it came to stocks, they would just have to do it 1 or 2 times, or 3 or 4 or 5 times. They'd make so much money, and then they would do whatever they wanted. That's not how the world works. You don't know where it's going to go, even if you feel very, very confident. So I like to always leave a bit of room. And also when your stock does incredibly well, let's say it goes from, 100% a year, something like that, feel free to take some wins, sell some of it off. With me personally, when I'm holding stocks I really believe in, I try not to sell that much. I will sell a little bit if they're just doing incredible. I really like AMD. It's not that surprising. When AMD was above 200, I sold a little bit, and now I can continue to DCA in when it's below 100, which is crazy. It wasn't even 8 months ago that was happening, but that's just how stocks is sometimes. So I think I covered what I wanted to in this video, guys. If you enjoyed, I appreciate if you like or subscribe. Daily stock content on this channel. I'll catch you next time.